question is, can you do a cost seg on a fix and flip? Eugene, can you do one? The answer is no, but go through it.
Yeah, so I would not do a cost seg on a fix and flip, okay? Because you're going to be exiting that deal. Right now, if you're going to do a cost seg, we generally recommend that you keep this property and you hold on to this property because there's a thing known as depreciation recapture. Okay, it's known as depreciation recapture, where all that depreciation that you took is going to be considered taxable to you, typically at 25%. Okay, now if we do a cost seg and you do got to exit, we recommend that we do a 1031. Okay, we recommend that you do a 1031 so that we can roll all that tax that you would have suffered, that you would have experienced over into the next deal. Okay?
And we'll talk briefly about a 1031 in another time. We're going to get into that slide, but it's important that we just jump back to that one slide right before this. Just to understand, a cost segregation, which Eugene said is a third party that you're going to hire.
Yep.
You can hire them. Your accountant can recommend it. They're going to go and do a engineering study to do what creates from the 27.5-year depreciation schedule. It's going to accelerate that to 5 years for carpet. They're going to pull down every piece of nook and cranny out of the property to accelerate it from what Eugene has mentioned, 15 years and under, right? And so the goal is that, and when we buy properties, we can buy a $10 million property and get a $3 million first year loss. And so I can give that gift of loss carry forward to my income, that if you do that every year, you have the ability to offset 44% of ordinary income. And when you do sell it, if you did have to do it, you do recapture at 25%, correct? But it's better than 44% at the end of the day.
Absolutely.
So even at the end of the scenario, either direction, cost segregations are so important. Pay attention. So long as you have income, you have a huge opportunity right here with cost seg, and we can dive more into it. It's not as complicated or scary. The word segregation is just long, but it just means accelerated depreciation of your asset at the end of the day. And it saves people so much money. The high net worth people that are making $10 million a year developing real estate, they're paying zero tax. I guarantee you it's only because of cost segregation studies.
Absolutely. And here's a client of ours that we did in our practice. I mean, they got a $90,000 tax refund. They got a $90,000 tax refund. Okay. And they got $90,000 from the feds, okay, from the IRS, and they got $16,000 from the Wisconsin Department of Revenue. Okay. All because they implemented the things that we're telling them to do. Okay. They're a tax planning client. Okay, we meet once a quarter. In fact, this client, we meet once a month because he wants to do it again, because he anticipates that his income is not going to do nothing more but increase, which is a great thing because the number one rule in business is to create income.